30 seconds slow or something. That's all right. So welcome to our first Audit and Finance Committee meeting for 2019. It's the first time I can recall all the time that I've been in council that it coincides with another very important day. And those that are smiling know what I mean, and I'd suggest people like Councillor Dowsing, he's a bit of a romantic, that I'm sure he's done something about it. Though romance and audit and finance don't sort of go together very well, do they? But anyway, let's kick off our meeting for 2019. We've got a busy year coming up with reviewing with those workshops that we're reviewing the finance, revenue and finance. So, yeah. Okay, so those are very important that everyone attends those, because it's an iterative process where you work through the principles to start with, and then you just start getting out of the detail later. So hopefully everyone can attend all of those. Okay, apologies, we seem to have a full table, so I guess we're all here. So any declarations of interest? Probably none there, no? Okay, we go to the minutes, and we'll include the public excluded minutes because there's nothing on that part of the agenda. So if somebody wants to move that, Councillor McLean is moving. Councillor Stoltz seconds. All in favour say aye. Aye. Against, carried. Okay, any matters arising out of those minutes?
There's a typo on the bottom of page 8 in 10.4. It should be uniform annual general charge, not and general charge.
Yeah.
And I have just a couple of questions, you wish, Mr. Mayor.
Sure.
Mr. Chair, can I just ask on page 9, why is it so difficult, or why does it take so long to develop terms of reference for internal audit? Because we've started that process once some time ago. Every other entity, generally of any size business, has a role of internal audit. So there must be some good information that is available. I mean, it says under 10.5, where we've discussed internal audit programs time and time again, that the terms of reference are yet to be determined. So could we understand why that is so hard? Thank you.
It was just the timing of this report. It is there, ready to go. It will be at the March charter. It will be a new internal audit charter coming in there. And it was just for the timing of this, because the fairly substantive amount of work for the draft annual plan came into play. And to get it for this particular one, it wasn't going to be as timely. So it will be at the next finance and audit report.
Thank you.
Okay, so if we could go to the action sheet. Is there any update there, Pauline, on anything there?
No. No, so basically the comments should be updated and under each of the points, what the changes are. So unless there was sort of comments needed to be raised for any of them, they are as they stand.
Councillor Stoltz.
One question on page 13.007, where this has been on there for quite some time, but I'm sure, please correct me if I'm wrong, but I have not received that information that ECT responded to the Residents Association about the electricity discussion they've had with the Tairāwhiti Residents Association. So if we can just follow up, that was not sent to councillors. I've definitely not received it, so maybe we can just follow up with him. He's promised to send it to council. Has any other councillors received a correspondence from Gavin about that? No. So we just need to follow up on that. Thank you.
Oh, sorry, Councillor Foster. Blinky one.
Yeah, I just want to follow up on Council's perspective of the Heart of Gisborne Activate Tarawhiti amalgamation, please. Because it's supposed to be happening by contract with AT at April, so that means the rate has to change to AT rather than Heart of Gisborne. So could I get Council's perspective of the update at the moment, please?
Can I add to that so that can be answered at the same time? Because while it's not Council's role, that says there that January 19 would be a special general meeting. That hasn't happened. Heart of Gisborne are needing to have a meeting with the people within that rating district.
I don't have the information at the moment, but I will. Oh, sorry.
Through the chair, so I understand that there was going to be a paper potentially coming to council addressing some of these issues around Heart of Gisborne, so they're close to finalising and agreeing on matters. It's just around asset transfer and that schedule that they need to work through, so that I understand that's still tracking on time.
So supplementary though, Mr. Chairman, they do have to have a meeting with the people that pay that rate, because we're specifically rating them, and once it's determined what that rate's going to be used for, that has to be put back to the ratepayers within the parameters of that particular area. I mean, surely we can't just change the use of the rate without consulting the people who pay the rate.
So through the chair, the rate has been targeted for the purposes of city centre promotion, not for the Heart of Gisborne as an entity. So this has been canvassed previously before around council's consultation requirements for that area. So unless council were going to change the purpose of that rate, so if council were going to change the purpose of that rate from being city centre promotion, then yes, definitely you need to go back and have that consultation. But seeing that it's a transfer of the activity to another entity to deliver, in this case being Activate, the consultation requirements aren't there in terms of actually a special consultative procedure, if that makes sense.
Any other queries on the action sheet? If not, we'll go to page, whatever it is, 16. Draft estimates for the annual plan. Pauline.
So just the first thing, there's some corrections on there. It's not starting off with a little bit of corrections, but the overall rate percentage increase is stated as 4.64. There's a new resolution that's coming out. It is actually 4.58. The actual dollar terms and the amounts that's talked about within the paper are correct. It's just that percentage that is on there. So the resolution is going around with it, just so you've got it for your reference. Also, some things on the commentaries where we had on page 25, just with regards to the capital projects. I just want to sort of update those comments. One of the things that's got around the Lawsonfield Theatre, what it should just say is transferring the uncompleted expected funding for needed for 2019-20, not the timeline, because it's more likely just to be July or August, the completion, and it's expected to be about 300K at that stage. The second thing under Peel Street, it should just say carried forward from 2019 to 2018-19 to 2019-20 full stop. Originally in this year, we have the capital project estimation of 400K, and it was decided by council that only 280 needed to be earmarked for the following year. And that's what it was just referring to, is the difference between 120 and 400 could have been used for other things, but the decision in here is only for the Peel Street to be transferred, which is estimated 280. So that's just a correction on that. And just for ease, if you were reading those sort of things, and page 27, it looks like at the bottom of page 27, it's redevelopment of Olympic Pool Complex. phase one, it says in the LTP 1.275 million, and it looks like a zero against the annual plan. Fortunately, if you go over the page, it was probably a little bit of formatting where it didn't line up between the same project. So you can see over the page there is the annual plan has 1.275, but if you're looking in isolation, it looks like we've now rephased it. It isn't in there. And probably only a minor thing, there was on page 19 of the report, we were referring in table number item 17, it says the draft annual plan shows 34%, but if you look in table 1, and on the second time it says actually 39. So just a little bit of changes to those sort of things, and apologies for that. 39, the table is correct.
Any questions around that slight change? So what we're saying is that the long-term plan had 4.52%, and we're now going for 4.58%, an increase of $34,000.
That's correct.
Councillor Seymour.
Thank you. Can we ask about specifics within the document? Because we've got what I take to be, if we look on page 25, new budget or new project is the beginning of the line. And then we have had in the script, it tells us that there's been some rephasing. So I'd like to ask around under stormwater, where we look like making a saving of 500,000. Is that because we've dropped, and I can think of two quite specific drainage projects, one of which has been pushed out from a previous year, and they're not mentioned in this document, and I'm not sure whether this is, and I do believe it should be asked here rather than at infrastructure, and it can be specific, so Mr. Wilson can answer. I'm talking about Douglas Street and Parkinson Street, both of which appear, if you look in the annual plan, as stormwater projects. Are we missing them out of there, or am I missing them from somewhere else?
Through the chair, the only projects that we're talking about making changes to are the Tarahiru Hazeman stormwater catchments. The ones for Douglas Street are still very much, we've got the designs just come back at the moment, so we are still progressing those within this financial year. It's 540,000 I think we have on for that project for this year.
And is Parkinson Street still to be done in this financial year?
To the best of my knowledge, yes, the designs have been done for Parkinson Street as well.
Because the engineer is not with us anymore. You know, we had a meeting up there and walked the street and sort of things out. Okay, thank you. Thank you. That covers that one.
So any other ones that you want discussed? So moved by Councillor Stott, seconded by Councillor Dowsing.
Before you put the paper, Mr. Chairman, can I just ask about for more specifics on page 22 around the positives of option 2A, and it says projects forward or rephased for projects to be heard after Council's 28th. Can we just understand more clearly what those projects are that are rephased? Because if it is only what's written, then that's absolutely fine. Because as I said, I've highlighted them and they tend to be ones with new money or money external to council. So is there something else that's not written that we should understand about the rephased projects that are going to be heard after the 28th of February?
For the chair, no, it's only those that have written. It's
only
indicated.
Only
that's in there, it's a highlight, yes.
Okay, thank you. So can I ask whether the flooring replacement program, even though it's only 10,000, and cultural activities on page 27, whereabouts is that?
So how that reads there, it's exactly, so on, just for everyone's cultural activities, under that there's a flooring replacement program line item, and it says for 10,000 in LTP, but also the annual plan says it's 10,000, so we've not made a change with regards to that, so it is in. So anything that is on the variance column is a change to what was in the LTP.
Right, thank you.
Okay, I'll put that. All in favour say aye. Aye. Against, carried. Thank you. Going to page 33 now.
This particular one, I think hopefully it is self-explanatory, is just to say that we have the fees and charges that we adopt alongside with the draft annual plan at this stage to go out to consultation. And this is just indicating the need for the fees to be in line more than what was an inflationary rate. And what it's come back is indicating that the cost for between a 7 and 9% means it's a little bit more than what was above normal inflationary rate. So it's allowing for a discussion with that.
Councillor Seymour.
Can you just explain to me why we would need, why this district, you would think our costs shouldn't be that high, project should put us as the 10th highest around New Zealand for cemetery charges. Do we understand, because somebody must have looked into that, that's on page 35, 12.
That's only
look, I think this is sensible. The only worry is that we have a trouble with debts around this charge anyhow. So that's likely to go up. But at the end of the day, you have to charge a reasonable amount. You can't actually the charges be determined by that. So I think this is sensible. It's bringing us a little bit more in line with national charges, and of course we've got to recover the costs. So unless anyone's got an objection, I'm asking for somebody to move this. What? Are you moving it without the word small then? Okay. Do I have a seconder? Councillor Dowsing.
I was also going to make a commentary similar to Councillor Seymour's, but it was more around the assessment criteria. And here we're obviously looking at where we're not in line with national levels and we're below. Have we done an assessment yet to see where we're higher than national levels and where and if we're charging too much for any of our services? Because we have discussed, I think it was mid last year, about doing a report or doing an assessment of our council's cost, like whether we're reasonable nationally in terms of our fees and charges, and whether we, our affordability in regions is what I'm getting at.
That part is a review of the fees and charges, and accompanying that with the revenue and financing policy. Of course, one is a funding of rates, and the other is what is the apportionment for user fees. And so the fees and charges is their ambit. And as part of that, yes, we will be doing what do we compare in other areas as well across the board. So it will be more comprehensive review of all those things.
One more thing, and from your comment earlier as well, Chair, was that I assume it's your birthday today because no one else is getting a present for me.
Actually, I've just had a whole lot of hearts come up on my my watch here. My wife's realised she's got some flowers, so just reaffirming I'm a romantic too. Yeah, you watch it. Okay, but where were we? I just have to put the motion, don't I? All in favour say aye. Aye. Against, carried. Right, with that, you've got mover and seconder. Right. Page 37, insurance. Yes, the world is changing.
So basically, this is just to give you an outline of the suite of insurance policies that we actually have, what are the premiums that is coming up, and the increases that we have for the current year, and just the overall limits of liability that council face. So it's quantified in the sort of the paper with the appendix to give you that awareness. So why you obviously got exclusions, which means your limits that you cannot over and above in a certain amount, you can, so a 25 exclusion on your policy, that that first 25,000 we don't claim, we cannot get recompense for, but there's also our membership as part of BOPLAS, as part of that group, is that in any 12-month period, if that group has a quantum of claims which is above that, then those claims will be prorated against the group. So it's awareness of what the cover is and what are the kind of financial risks that we are sort of managing to take. Just to give you a little bit of the background, in 2015, which this paper gives you reference to, is insurance strategy that they had in place. And that strategy is we're just trying to make sure that we will update it with what we've got, but there were certain principles that they said within it, and I'll just reiterate that came through. It says, Council will transfer financial risk where appropriate. Council has a conservative approach to insurance. Council will self-insure in part where appropriate contingency funding is in place. For example, flood damage for roading. Council will ensure sufficient financial reserves or capacity of funds, which means the ability to draw down in debt, that is another capacity, are in place to cover the periods before insurance payments are received. And they noted that there was a strong management of making sure that having policies in place, not to cover every eventuality, but a sort of a risk-based approach with it. But I just thought I'd reconfirm what is in place, but we go forward to review those.
Yeah, I think we've got a good deal here, because really, if the Bay of Plenty was hit pretty hard, well, they've got a limit on their below ground assets, for example, of 500 million. Whereas ours is 250 million, which is half of their enormous amount of infrastructure. And so dovetailing onto them, I think it's a good idea. Of course, where we might suffer is if the Bay of Plenty have a whole lot of claims, all our overall insurance goes up. So we get hit with that. Whereas if we have some claims, well, we're only a small egg in a big basket. But anyway, I mean, I think this is a good system. Councillor Stoltz.
I had one question. If you go to page 41 and we look at the financials, obviously there's a hole somewhere because we've got an unbudgeted amount going forward. Where are we going to get that money from? And then secondly, this issue is not going to go away. It's going to get worse as time carries on, which will affect our 10-year plan and what we have budgeted going forward. I can't remember, and I didn't check what we have budgeted going forward, but we might have to re-look at that because things will not get better. It will probably get worse. So I would just like your comment on that, Pauline. Thank you.
So just as a reference, so where it says in number on 41 and 28, it says there's an unbudgeted 200. Just want to clarify that. It is an increase in premium. Okay, 200K is an increase in premium of what we actually had in 2017-18. However, the annual plan provided for an increase, but the difference for what we didn't get was more than what we anticipated, is a difference of 137K. And in addition to that, there it says there's a call on risk pool, which is 102. So the 102, which it says on number 29, there's a difference which we didn't, what is not in this particular year's budget, is 239K. So we will be forecasting that within, and we have been now, the year-end position of what that is with those higher costs, and trying to see that there is a mitigation of other operational costs to cover in this particular year, but we are aware of this year's financial results. Secondary, it is in the next year's annual plan, we were notified at that particular point that there were going to be higher increases. So next year's annual plan, we did increase it. So we noted in that most of the increases were due to insurance. However, there is a bit of an estimation if it is more than what we anticipated. So for argument's sake, it's saying over on page 40, and if you look at the blue column, it says, and just to give you a bit of awareness, it says annual plan insurance budget. And if you look on the second line, 2019-20, it says 907. So we increased our provision that what we had in there before to reach 907. Now it's coming to say that, well, maybe it's even a little bit more than that. And it's estimated over at the 960. And we haven't got that at the moment in the draft annual plan, was 960. That's a 5% increase. We're going to get from them, what is their indication if it's, and before it's been about 2.4, but how do you know what it goes up to? If there is to the higher increase, where at the moment the annual plan hasn't quite got that, so there's a shortfall. However, there are other things which we change in the final adoption of the annual plan, which we know that we haven't got included. There's about a 75K of lease income that has been increased for next year, which is not into it. So at the moment, we're offsetting the two. We're okay without changing anything with what we said in our drafts. So things happen when we do the annual plan, which is up to those estimates that we know up to December. Things change. We try to look at anything of those changes so we incorporate those known changes before we adopt.
Councillor Dowsing.
Thank you. I'm happy to move this paper if you haven't got a mover already.
I haven't.
And it seems like we've... thank you, Pauline. It seems like we've got increases in place, and we've increased our increases, and we've speculated on potential increases on those increases, so we're all covered. In the end, none of this is...
Yeah, but just an interesting aside on this is that just looking at the table on page 38, that premiums have gone down in some areas, and the surprising one is that the declared value of motor vehicles has increased 30-something%, and yet the premium's gone down. I can't work that out, but anyway, we won't argue. So I'll put that. One last question, Councillor Thompson.
Harbour Master wreck removal, and I know we are the authority, we are the Port Authority, but I wonder if it'd be worth a conversation, because basically that is a cost to the operation of the port, and have we had a conversation with the port to see if they can fund, and I'm not sure about the Harbour Master salary. Does that come out of our salary package, or just...
Do you know the point?
It does, but then we have some charges from them that they help to contribute towards those costs. So we have income from the port with regards to the Harbour Master cost, but yes.
But could we just find that out? That would be interesting to know whether we are charged the premium for that, because that is totally our responsibility.
Correct.
But if we can actually get the port to contribute to that.
Can we ask Councillor Watson now?
Nadine, do you have an opinion or any knowledge around that? You'd have to find out. Yeah,
I can find out.
okay.
From the action point.
Yeah, we'll put it as action point, okay?
Harbour Master's definitely an employee of the council.
Yeah.
Everywhere. But the insurance might be something that we can shoot sideways.
Yeah, but wreck removal. Well, you'd hardly think that was our responsibility, but anyway, we'll find out rather than try and speculate now.
No, it's the wreck removal on the schedule on page 2.
So anything related to a maritime response is a council responsibility.
Is it?
There's been quite a bit of work done here in the regional sector around our liabilities and insurance, so it's probably worthwhile bringing the report back outlining our responsibilities.
Yeah.
It's quite large.
Okay, it'd be good to know. Councillor
Especially as we've just got a new.
I just, in following that, I was just interested to know in respect to the title policy crime, what does that cover in the space of council's role regarding crime as a whole topic, I suppose?
So crime is council's employee, yeah, so covering those kind of things that may happen. So we're trying to, yeah.
Okay, we're all done. I'll move recommendations. All in favour say aye.
Aye.
Against, carried. Righto, we're on to page 46. Financial report.
Can I just get through the chair?
Yes, go ahead.
Okay, thank you. Just want to give some updates with regards to the capital program and just some things with it, because I think we might have had a little bit light with some of the explanations we just gave the kind of the renewal. So I'm just going to give you some background information so you've got some other things with it. We said, and this is on page 51 where we started to give you the capital expenditure for the year, which says on note 13 what we are against to the year to date, etc. So in reference, we had been saying that the wastewater by the first 6 months, and this report is up to the first 6 months, was probably only going to be 38%. So wastewater managed to actually do 71% in the time frame, so it got a little bit ahead of the original phased budgets that they had estimated. Now, as a secondary things, as an update, what we did last year, we only said whatever your budgets were, we divided it by 12. And we tried to say when we have more of an indication where the program is against where you said you were going to be, is try to phase those projects. So in this one, the wastewater came back onto track, but the stormwater and water supply are a little bit below than what they said. But in its context, as a reference point, there's still with it, there is, and Dave can explain the variances for those particular things. When I was looking at it, what did we do last year? And that was actually quite interesting. Roading is about similar to what it was last year, but to give you a context, with roading last year, the amount of emergency works that we completed December last year was 2.7 million. For December this year, we have 8 million of emergency works that was done there. But the actual difference in the capital program is pretty similar to what it was last year. So there is an increased volume that has been going on. Similarly, wastewater, the program is significantly increased. They're up what it was from last year. Again, they were about 300, I'm sorry, I've got the wrong page. Wastewater was 292K. Wastewater, stormwater was only about 110 and 59 for water side. So there were significant increases to the amount of the whole infrastructure program to what it was last year. And it's not reflective in this report, it's reflective only of what we have phased and where we were. So I'm just giving you a bit of a context with those kind of things. Sure.
Sorry, you just mentioned that December last year versus this year for road and capital works and the associated emergency maintenance. Was that, so the totals were the same, but this year we've got 8 million worth of recovery work and last year 2.7 million, but they were inclusive in the total, or is that additional to the total?
Yeah, sorry, I may have confused it. This is capital total, but I was trying to give you in context what the program that had to do for their maintenance, and
So,
their maintenance program was quite substantially increased.
So what I'm trying to understand is, in terms of the total of the maintenance contract, do we reduce the 8 million out of that to understand how much of our total has been done on maintenance, or is the maintenance level the same against last year, but we've also completed $8 million worth of?
I can't tell you the exactly ones, but David actually can, but in terms of the financials, they're not much difference, but Dave can actually give you the more of a breakdown.
So through the chair, as you're saying, Councillor Dowsing, our maintenance spend is comparative to what it was last year. On top of that, we've done the $8 million worth of emergency work separately. So our capital work program and our maintenance for BAU is about similar to last year. As you know, we've hit construction season now. You've seen the spray trucks and everything going around. It's the $8 million worth of extra emergency work that's happened on top.
That's what I was trying to understand. We've actually delivered around about $5.3 million more work in the same period.
Yes.
Well done.
Yeah.
So I guess the question is, with our capital works program, how I see the forecast a few pages on, which is still below our budget, which happened last year as well. Are we still forecasting as per the graph on which page it is? On page 55?
That's what the forecasts have come through, but we will be updating that, etc., with the new numbers and revising those. We revise those each month, each 2 months, I should say. So we will just have to check to see if they're still.
Which, if you do achieve the forecast, it probably would have been you would have been achieving much better than you have in previous years, much closer to the budget. So we look forward to seeing that. Robert.
Through you, Mr. Chair, I see that we've got a operating surplus which is favourable to our budget. Emergency works and some of the other projects that we've got underway are being externally funded. That's good. Capital expenditure, 12.4 million versus a budget of 18 million, 69%. Yet our long-term borrowings are 56.27 million versus a budget of 48.69. I'm just trying to get my head around why the borrowings are greater than we budgeted, yet, you know, some of the other indicators sort of would point the other way. Thank you.
Pauline.
Through the chair, yeah. There's a later report which says the Treasury report, and in the Treasury report it gives a reference that we had a 4.9 million deposit. So we were preloading our funding for coming in during March, and the reference for that is saying that we wanted to have the reduced margins that were out in the market at that particular point in time. But if you offset the deposit against those, the debt, you'll find that we're not too far out with it. There's also a timing issue, which is what the Treasury report comes into. It depends on when we receive our rates and our flows. So we have ebbs and flows during the year, but within the terms of that reference, The main contributor is why that debt is up higher is because we've got a corresponding investment, a deposit, which is going to preload our payment in March.
Councillor Seymour?
Thank you. Thanks very much for that lovely brilliant. On page 54, cheers. On page 54, we have just a few line items that are substantially over. I'm not worrying about something that's only a few percentage points over, but if we look at water and coastal resources, they are 255% overspent. Is that something that we won't be doing for the rest of the year? Is this, and just does that relate to some of the others, conveniences and cemeteries? Now we understand about cemeteries because we've had a previous paper today about that, but is it expected in art and public places, which is a relatively small budget but quite substantially overspent or spent greater than the budget, is it expected they'll come back into more or less in line by year end?
Just give you a couple of answers to those. So the water and coastals, I think that's a phasing wrong. So it's under environmental services and protection. There's some of that is because we've also got the additional external funds, but that 128 against what the year-to-date budget of 50, but we see that the full budget is 280. So there's two components to that. We've received external funds, but also I think there's a phasing for that particular one. The second one where you say in arts and public places, which is about the third line or fourth line from the bottom, it says 388 against the year-to-date budget of 160, which then it puts a variance of 243. Included in that is the PGF work of the Cook's Landing. So within that, we have, it's 326K on that total. So the PGF, which you don't see the other side of that, is the income that we have received, which I think is about 272K against that particular line item.
Right, thank you.
I guess the problem there is that on the previous pages with the financials, there's a footnote with each of them, and on that page there isn't. So that's why there's some questions.
Yeah.
So it might be a good idea to put them down as well, so we'll know.
I just had another question when I find the page, Mr. Chairman.
What was that, Councillor Dowsey? Oh, you moved it?
Yeah. I've seconded it, Mr. Chairman, but
second
I
the Councillor Seymour.
was just trying to find the other question that I did have. I want to draw everyone's attention to the level of loans, which is internal loans at 85 million and external at 50, and you have to reread the whole thing to find those two figures. My other question relates to the next paper, so I'm happy to second it. Thank you.
Councillor Thompson.
Thank you, Mr. Chairman. I'm just wondering if there's some way we can tidy up something. And that is every time we come here, we talk about and you know, you can look at a figure and get a bit of and then you say, oh, it's about timing. And I'm wondering, this timing thing, if we can get some sort of consistency so that we know that it's either, that is the timing consistent, report on report on report, because that would mean you haven't got, you sort of have an idea where you were. But if you were a company doing your annual or monthly reports, at the end of the month, you'd shut the invoices off. Anything that was invoiced before the end of the month is counted as income, whether you've received the money or not. And then you do your stock tallies and then the value of your stock, and that's added up against one another. Whereas we have always got this thing going on about timing, and it throws an unclear picture if you're trying to sort of get your head around the numbers. And I wonder if we can sort of set up some sort of system where there's a consistency so that timing can be overshowing. You know, we know there's an issue with cash coming in or something coming in, but we can show it that the issue isn't there. A bit like an invoice at the end of the month is counted as income received, whether it's received or not, because it's been invoiced out. And later on it can be shown as debt if there's a problem. But when I sit through this, and you've always got these things, you see this number and you say, well, the explanation quite often is, oh, it's about timing, or it's about grant money that we received for this. You know, like if we can, as a comment I heard before, is that it would almost be easier if the PGF money was left right out of it, and those projects were set aside because they weren't, you know, and that sort of thing. So I don't know, am I being complicated, or am I not understanding something? Or
Probably.
I think there's two things you're actually saying. There are some variances in there, and we're trying to explain the variances. And some of the things when we set the plan, we didn't have those projects in there. And most of those variances, we've got two major variances which are explaining, and you're quite right, we keep on going back to that because they are actually variances. And that is the emergency works. It happened in June. And then the impacts of that happened in this financial year, but we didn't actually have the annual plan budgets aligned. So we are talking in variance and those kind of things. Same thing is with the PGF. They are variances to what the plan had stated, but we try to explain why that occurred. The other things is when you talk about accruals, you're quite right. We accrue the income to that period so you don't have that as addressed as a timing issue. So the main things in this is what we had planned to do, there are changes to that, and that the impacts which will happen each month for this year, because we haven't included that in, is the PGF and the emergency. However, when we see other variances, which what you perhaps are meaning as well, is what are the true variances? Don't tell me anything else, but anything, is it favourable or unfavourable? We received more income than expected, or actually this costs more, like the insurance, costs more than what we anticipated. It's harder to do with our big budgets to actually do it, but I know what you're trying to say, and I'm trying to see how we can actually streamline that a little bit as well.
We always take this at the same time that the income, as the income comes in, is it always consistent, or is it sometimes these are set when only half the income comes in and the income can't always, you know what I mean?
Well, that's exactly it. It's not always predictable. And look, I totally understand what you're saying. It's actually trying to understand what the underlying performance is, and without having the extra grants and donations. And it's very hard for us as councillors to read these reports, because this is not our business, is dealing with financial accounts all the time. And council is a complex business. It has so many variations, and so, yeah, look, I totally understand it. I don't know whether there's an easier way to present these reports, because at the end of the day, what we're trying to do is actually make councillors understand how we're going, really, isn't it? So gee, there's a lot of hands going up. They're all going to have suggestions how we do it, obviously. But anyway, we'll go around. Councillor Seymour.
Sorry, Mike. And it might come up, well, it will come up this afternoon, but I think we need to note it because it's here in finance, and it's the unspent money in our capital projects for roading. And it's over 2 million unspent to date. And we know we had some problems getting started, perhaps, in our capital roading project, but roading is just such a critical part of the work of this council. And we get criticism all the time, and we understand that people had to be taken off the rural roads to be put onto the state highways. But it does bother me significantly that we're more than $2 million underspent in the capital roading budget. So could we hear about that, please?
David replies in full. I will say one of the things with that, there is the walking and cycling project in there of 1.8 million, and we've already indicated that that will not occur in this year, and we've got it in next year's annual plan. I think that accounts for most of it, but if there's anything that David wants to add, I'll just...
Well, a note to that effect would have been helpful in the paper.
Sure.
So through the chair, as Pauline said, the Rutini Road cycleway improvement makes up the bulk of that. The other part is actually we're ahead. We didn't receive all of the invoices in December from our contractors. They decided to hold them over till January. They ran out of time before the end of Christmas, and there's about 1.4 million worth of capital that they haven't billed us for. So we're tracking ahead. Don't worry, it's all within budget. They're just working faster with what we've got on at the moment.
Thank you.
Thank you.
Councillor Foster.
Yeah, thank you. There's just a question relating to the previous topic that Graham raised about timing. And it's when we're funding projects that are going, and we're waiting for funding from PGF and maybe NZTA, and we've got the variances in between. What is the cost to council for those delays in funding? I mean, you know, overall, it must cost us a bit having to fund these projects, and then we're getting delays in payment coming back from PGF or NZTA or whatever. So it would be quite a good exercise actually to find out what that actual cost is annually, you know, with these delays, because it's something that we should not have to carry.
Through the chair, I can say we can come back with the other interest costs, if there is, that we have in certain things and how that relates. But what we do with the roading, which is our biggest grant funding, so where the function that it is, we go to, it's called TO Online, and so it's a website and they have certain categories. So where the funding itself hasn't come through for a particular item, which they have individual lines, we take it against another item, and they just do year to date. So it washes out by the end of the year. So we try to minimise any of those interest costs throughout the year until the funding comes in. So that's what we do with those. But with the other, we can come back with the sort of the interest costs on those carrying.
Councillor Dowling.
Thank you. Yes, I just wanted to carry on from Councillor Thompson's comments and specifically in reference to Mr. Hunter's commentary about this report as well. And it's that that forecasting can't be accurate enough to give us any clarity in the numbers in these documents, and that there's very little information we can actually glean from it in terms of at this high level. And as you've mentioned, Pauline, it's in smaller reports and more when we're looking at the numbers in detail, we can find information. But in this particular case, I don't feel confident that I can deduce anything from those numbers. As Mr. Hunter looked at, you know, we've got higher revenue, we've got lower capital spend, and yet our debt's higher, and we can't attribute that to anything from this report. And that's as higher level figures as you could possibly look at, and we still can't understand that mechanism. So to find value in this report, we need to, I personally think we need to either break it down and take it in more in segmented views over different meetings, or we need to find a way to extract variances, so extract the PGF and extract the potential ups and downs of our cash flow, so that we can just see how we're performing against budget. But other than that, if we have all those variances in, I can't find what I'm looking for in these documents, which is just monitoring the performance.
How about the integrated report that we've had before, which actually dealt with all those issues, with the timing issues, the progress, and all that detail? How often were we going to have those? Was it quarterly? So we must be just about due for the next lot. So hopefully that will answer a lot of those questions for you. Yeah.
If I can just reply, when I look at this, because it is a high level, so from the high level that comes into this, I analyse all the variances, what it was before. I look at what are the material differences that are causing, what are the cost drivers that's causing the variances. And anything that is a significant cost driver that occurred in that things, I make sure that that is identified within the variances. And you see those, especially when it comes into it, because we spend the time to say is what are the notes, what was the variances within that, we will explain it in there. But overall, when we try to say what is the summary, what is the net effect to council? And the net effect for the changes to what we're seeing here is that, yeah, we've got more income. And we've got more income because we received it from NZTA and the grants, and it was a tribute, but we've also got more expenses. And that more expenses overwhelmingly was from the emergency works cost. So we try to explain what that was, what are you seeing in terms of the overall summary. In any of those significant variances that are different from that, we try to embed it within the overall report as well.
Just a supplementary then, I think potentially, and then I'm not criticising the report in any way. I know that the report is accurate to what we know, but the value in this report is actually in your commentary, not in the numbers, and the numbers are a distractor in this case because they're too, there's not enough information for us to take anything from them. So perhaps this would be better restructured as a report from you, and the notes become the highlight, and it's more of a explanational presentation instead of bullet pointed. But I don't know, maybe it might work, might not.
Yeah, well, look, I tend to think that the information is there. It's just hard to grasp it overall because there's so many variations and notes and all the rest of it. So it is difficult, but I'm not sure how, do you want a sort of a general statement from Pauline overriding the whole thing to, on her opinion, how we are performing financially and just a high level discussion about it?
Definitely we'll look at other councils of how they present
That's a
this.
good idea. Yeah.
And we can look at that and also in line with what you're going to get for the annual report, because we're trying to make sure that you've got up-to-date information that is in line with the annual report. But we'll look at what other councils actually have and how to come back to give it so it's that you can follow it easy enough as well.
Yes, thank you through you, Mr. Chair. Just still some further questions about the debt levels. Just wondering on statement of financial position, page 52, it's showing our borrowings at basically 56.3 million. In the summary on page 62, we're saying that our external debt borrowings were 50.5 million. Just wondering if we could just get an explanation on that. Also, you mentioned that one of the reasons that the borrowing was higher than budgeted was there were 4.5 million borrowings brought forward to favourable rates. I'm just wondering where that is showing on the statement of financial position. I just wondered whether it would be in deposits.
For page 52, for where we're looking at things and just for the reference with Mr. Hunter's comments, so you can follow them. Our current liabilities, it's got a borrowings line, but we also got a non-current liabilities line, which is borrowing. So those two add together, which is our total net debt, which is 57.7. What you'd look at under current assets, where it says investments of 4.92, they offset that. So that is the deposit recognised within the set of accounts and the financials. So that follows through to the Treasury report.
Okay, happy with that. That's the deposit sitting there. But I'm not. So the borrowings figure where you say on page 62, the net external debt borrowings were 50.5. Are you subtracting the investment from the 56 million there? I don't, we're saying borrowings of 56.3 million, and yet in your Treasury report, you're saying 50.5.
So that's in a different report, and we will go over that. But on page 64, it does say that external debt stored at 56.3, and And then it talks about borrow notes, what's offset it. And then it also talks about the 4.9 term deposits, giving the net. So it gives the reference going back to our statement of position as well.
So shall we leave
so
the
netting
debt
it off,
discussion
yeah.
until that report? Okay. Okay.
Can I just observe generally, Mr. Chairman, I don't think we should change the format specifically. We might add something to it because this is what needs to build through to our year-end report. But if there, the issue of whether we have received internal grants for projects and whether we haven't, all of those things aren't quite confusing and create aberrations when we try to balance potentially what we have in our annual plan with what we get today. So I don't think it's taking it this way. It may be to add some elements. Oh, thanks, Min. And with respect to, I think, which the Chief Executive has now sent us a date for a meeting to go over those big projects type things, which do add further complexity and confusion to some reports. So I don't think we should move from this format, but maybe we have additional explanation. And the Chairman's already noted where we could have had some more notes. But we need to get a better handle on the ins and outs of the additional money, like the PG unit money, where that's coming to pass and when it's coming to pass, and even NZTA money, that still confuses the issues.
Thank you. Right, I'm going to move the recommendation. Councillor Cranston.
Page
It's already been
55.
done.
Yeah, page 55 on expenditure. I'm just wondering what our controls over the community housing are. We've got 37% overspend on expenditure on that. I guess that's because the management of that invoice asks for expenditure. Do we sit down and say what's satisfactory expenditure on that? Is that our budget to control, or is it theirs to control? And we like to see another chart like this with income to see the community housing income go up.
Can I just check on what page? Is it capital page? 54? Okay. Okay. So just give explanation with regards to that. They have 200K of renewals in the year. It's got 225 because 25 is relating for the staff rentals or the rentals, not in the community housing area. I asked them myself as where the phasing was. It was just that they were ahead of their budgets and then they're not going to go ahead of the full year budget of 200K and had the list of their capital projects. So it was just where they had big works to do in certain complexes, which was part of the roof, I think, and some aluminium windows, which was just the cost of that, with the chunks that they needed to do the work meant it's a little bit ahead of what the phasing was.
Which could be exactly the same page that I asked the questions on, where if we had a note, it would have, it does help, because those are at a greater, and that's one I'd said as well. But so the second part of your Councillor Councillor Cranston's question is relevant too.
Yeah, we'd like to see a chart like this with income, which will show an increase in
That's in the operating one, and probably the integrated reportings where they go into the more of the details of that. That's where that information would come as opposed to the big high-level council report.
Okay, are we done and dusted? All in favour of receiving the report, say aye. Aye. Against, carried. Shall we break for morning tea? Okay, thank you. Okay, we're on page 62. GHR are going to come along and have a chat with us a bit later after the meeting. So possibly at 11 o'clock. So we'll be finished by then, I would think. Okay, so page 62, Treasury Board.
We sort of came a little bit into that, seeing what was a little bit different to what we had before. And I mentioned it at last Finance and Audit that we would be entering into a deposit arrangement because of the cost of our debt, the margins going up in March. And we knew that we had to enter into a new loan renegotiations with that. And so that's why we had a little bit of a deposit. And so effectively on 63, when you look at some of the things, just as you look at, it says cash management, well, that's our money that we have in our bank. And usually the term deposit, which says 4.9, that's what we've entered into ready for the March drawdown. The others are just money market loans, which we know that depending on where it is at the end of the month, we know that we've got payments coming in. We just have the cash to cover that payment going out, and the same as what's in our bank account. So that's what we've got in our bank accounts, but the rest of it is just basically our total external debt. But if there is any other questions, I think most of it is either you read it and you think, I don't know what it's saying, and I know what you're talking about because it is quite a complicated ins and outs, swaps, whatever you're doing there, but that's the fundamental difference in this particular month from the previous month.
Yeah, the main thing is that our finance costs are decreasing, and the graph on page 66 shows that, and that's important. And the way the world's going, and it seems as though interest rates are going to stay down for a while yet. So we wouldn't expect anything to go up anytime soon.
Just with that, and because we have, and I'm not an expert in the Treasury function, that's why we have experts, which is your PwC. And then part of that, we have a monthly talk, and they give us indications of what things are happening. You're quite right. The short-term interest rates are sort of being forecasted to be probably kept down for the next 2 years. But what we have 42 million of our debt is long-term debt, and that goes into the long range interest forecast. So our short-term debt, we're okay, but the majority of our debt is long range. So that's where we have to manage the both. And long-term debt is not likely to stay down low. That's where the interest costs come.
Okay, any questions, comments around that? Move Councillor Porahena, second Councillor Stoltz. Receiving a report, all in favour say aye. Aye. Against, carried. Okay, 68. Do you want to come up, Fiona, if there's any questions around that? Sure. Councillor Burdett, we haven't heard from you this morning, so there's your chance. Oh, have you?
Yes, I have.
Sounds like an ear bashing to me.
If you go to page 71 and look at the decision process to consider rating decisions for contiguous and non-contiguous properties, I have here the council policy, which I doubt most of my colleagues have read, and I have here the very latest rating demands, the very latest. The main block at Kahara has got 25 uniform annual general charges attached to it, and the one at Monahani has got another 9. Where, sir, I might ask, is the fairness and equity of that? Suddenly a 30,000 plus increase in rates.
So, Councillor Burdett,
so should I take this to the review committee, or will we?
So Councillor Bird, are you talking about your own property
I'm
rights?
not talking about anyone else's. I know how it affects
Okay.
them.
Well,
I'm talking specifically about Murray Land.
Okay. About Murray Lane.
This is all Murray Land, all of it.
Controlled, farmed by you?
Yes.
Yeah, well, I think when it's a personal thing like that, you need to go through a process. And rather than just bring it up as an item when it's on the agenda as a general item, I think you should formally, if you want to have that discussion, is formally apply to this committee to have a discussion or review about your rates, because I don't think you can just put it on the table like that.
Okay, well, if you recall, Mr. Chairman, and no disrespect, I came to you in confidence to try and get some resolution, but I'll leave it.
There is a conflict of interest, and that's why you can't really bring a personal thing to the table like that.
This is a wider implication, Mr. Chairman.
Quite right, Councillor Burdett, but as I said, you can apply to, you can put an application to this committee to review your rates. Okay?
That's a waste of time. We've tried that.
Well, you haven't done that before, so.
Yes, I have. Not the committee, but through the.
Yes, you've done it to me, and I did review it, and I thought the staff had dealt with it adequately.
This is wrong in practice and wrong in principle, and it's got to be.
Councillor Burdett.
Okay.
I'm afraid you're going to have to finish then.
Okay, hang on.
Councillor Seymour.
Yeah. I would just like to commend page 75, because I think it may ultimately deal to some of the issues of ratepayers in circumstances like Councillor Burdett's. And the issue of continuity and how it is applied has been an issue around for quite some time. So I think that, you know, the issue of all the other pages is relevant, but I particularly want to speak to 75, and I think that this is really great that there'll be some work done based around this. I just think that we need to look, if we look at follow the green pathway, are the ratepayers identical? And without supporting or otherwise the points made by Councillor Burdett a moment ago, I've already alluded to the fact that we need to take into account the various landowning structures that occur, but one same person might be paying the rates for a range of, they may be in a trust, they may be in a company, they may be their personal piece of land, and it'll be, like Councillor Burdett said, a range of multiple owned Maori land. I think what we should do within all council officers is again require a letter from the accountant to say that the rates are all paid by the same person, just as we've done in multiple UAGCs on private property in town. So when this process is stepping through, at that box, which is a white box, are the ratepayers identical? The names on the title might not be identical, but the farming operation may be one common operation, and we can get that confidence through an accountant's letter. And I think the sooner we move to working through this process, the better.
Okay, well, look, again, you can't change the process today, but...
No, I'm just...
No, let me finish. But if we want a review of the process, because I believe that staff have, and actually you've got a legal opinion about it as well, that they have followed the proper process under the current rules, okay? If you want the current rules looked at again, well, we can do that. If there's a will around the table, or would it be part of our process of going through our revenue and financing policies and looking at these remissions as well as part of that process? So,
but if this is the process we're using, and it should be working. But it should capture, with the addition of that one comment around different titles, but one ratepayer. Can I just clear here from council officers? It should be working.
Through the chair, yes, it is working. I think that from conversations I've heard around the table, it may be that in the upcoming review that we do, that we look at making modifications to the policy which will widen the scope for some of the properties that can be contiguous as part of our rate remission policy. We have taken the decisions that we make and had it reviewed by a local government lawyer, and they agree that we are following the right process. So yes, it is working, but it probably means that not everybody is getting the answer that they want.
But can I supplement you then? If you were to get a letter from the property owner, the ratepayer, from their accountant, in the same way that we require it of rental properties or houses with a flat that Granny lives in, which was the policy we had, without needing to change the policy, wouldn't that pick up a number of the ones that are causing angst at the moment?
Just a clarification. So if there is a change or difference in the title, so that there may be a company and then there may be individual people, you would have to change the policy to reflect what is the extent that you are considering them to be the same people. Just to have clarification for us, because the entities that you have as a company, obviously, you may have a trust. Exactly. You may have other joint names that may be different. You may have sort of an operating lease. That is all kind of different things. You'd have to define that of what is the extent that you want to consider identical. So we would, because it is a departure from what you would consider in law.
Well, can I just say, I think we should do that.
Okay.
And ask what the process is.
Councillor Cranston.
Yeah, we have been through this, and you're quite right. I mean, the property could be a partnership, a trust, a company, husband and wife, or an individual. Those are different ownerships. They are different structures legally. So the only way that people can do this is if they take all those entities out and put them into one entity. And that's their call. That's the owner's call. And if the owners probably set them up in such a way to get financial advantages to having different structures. So it's at the end of the day, it's their call. If they want the advantages of having the rates come to one person, the property has to be one entity.
In response to that, Mr. Chairman, that doesn't take account of multiple owned Maori land that we are trying to get people to lease so that it brings in an income, so that then there's some rates paid for it. It's quite different for general title land, whereas what we're really trying to manage is where something is used for the end purpose of a pastoral property over a range of different titles. So it doesn't apply like a city property.
Well, that's another matter. But Councillor Dowson.
It is important.
Thank you, Mr. Chair. I'm going to move this paper because I think it's really inappropriate to be discussing this in this way. I think that there's direct issues with Councillor Burdett being on any review panel for this in the future, because he's obviously conflicted, and I think that the primary discussion here this morning has been the fact that this process is working perfectly well, just not perfectly well for some people, and those people just don't like our process, and that's not a reason to change it.
You're quite right, Councillor Dowsing. The purpose of the paper is not to review the process. It's just there for information only as to how it works at the moment. It's not there for discussion about deciding how you're going to change it or might change it or whatever, but we can signal that we can have a look at it again as part of our review and financing policies, but also as part of a wider thing of looking at all our emission policies as well.
With regard to that, Mr. Chairman,
I'll second it, by the way, too.
with regard to that, Mr. Chairman, may I suggest then that we put something on an action sheet so that we can actually satisfy the and the request and actually.
Okay, we can add that to it. Then that'll be part of our review of the revenue and finance and other emissions.
Mr. Chairman, can I just make a comment? Councillor Burdett was not even suggesting he was on a review committee, and so that was an inappropriate call to call out.
Sorry,
well,
in response
hang on. It's not up to you to decide that. It's up to me to decide it as being the chairman of this committee.
Right.
Okay, so leave it to me to decide it.
Can I just say that...
No, I think I'm moving on. Does Councillor Stoltz want to say something?
I just want to make a quick comment also supporting that we do. I agree it works for most people, but sometime last year, one of my neighbours came to council because he has quite a few properties around where we live, and some of the properties are in his name, some of the properties are in his and his wife's name. At the end of the day, the money comes out of that household or that business. So I do have sympathy for that. So I would support us in some process to look at how we can sharpen that up. It might not, we might at the end of the day come back to exactly what we work with now. But I have also from some of my neighbours have heard similar type comments. So I would support us in the proper process to have a good look to see maybe we can tweak it a bit, maybe we won't be, but I will support that.
Councillor Seymour.
The rest of my comment was exactly that we need to consider, because one of our pushes to get multiple owned Māori land being used and then beginning to pay its rates. So we need to do that kind of review so that we can see how that can be helped, because it is another stymie to paying the rates if we can't have one person paying the rates for several pieces of land.
With all due respect, that's different to what we're talking about here. Okay. So, interesting, righto. I'll move the recommendations. All in favour say aye. Aye. Against, carried. Okay, page 78, last item. And so we've got a good process organised now where it's more logical, where, and I don't expect to get feedback to me right now, but I'm meeting with the external auditor in March. And so I would like any feedback with any particular areas that you have of concern. We haven't had the opportunity in the past to have it signalled far enough ahead that we can have an input into the external auditors. If there's anything that you want to raise, you can either email me and I will talk with the auditor and include any concerns or any particular areas you want the auditor to focus on. Not that we can give them a whole program. Obviously, they are required to look at certain areas by the Auditor General, and you know, they have a direction every year as to what they're supposed to look at. But we can have some input into certain areas. Councillor Thompson.
That's our interest. See what the Auditor General requires of them, so we can actually see the brief.
I think they actually, in their audit paper, when they suggest what their program is going to be, they outline that anyhow. So it'll come to this committee as to what their audit program is. Yeah, you'll see that. Councillor Seymour.
So we perhaps have a clear look at the grant funding, you know, because this year, and we've mentioned it several times, the PGF money and the grant funding to capital projects, and so it would be really useful. I think the public would be really interested in how each of those aspects have fed into the projects and how it's been utilised, and what other money might have needed to go to specific projects within this last financial year.
So we're talking about an auditor here. He's going to audit how it's done.
Yes, and clarify where the PGF money has gone into key projects. Just highlight how they the key projects that have had PGF money into them in the year that he's auditing, and grant money.
So I'm trying to figure
Pulled
out how an auditor, he won't do that. It would be up to our staff to show how it's done. And they would audit whether, in fact, that's happening the way they've said. Because it's an auditor, he doesn't go and...
Well, he's auditing where funds are spent on behalf of us and probably the Crown, because it's an obligation to the Crown.
David, you've got a suggestion?
Through the chair, one of the things we're negotiating with the Provincial Development Unit at the moment is which schedule of works we're agreeing to each year going forward, and then how the accountability will be traced. So the roading spend is the Integrated Transport Priority Plan is the starting point for that, and the delivery of the ITPP and all of the works that are associated with that. There's going to be a process for approval for works to start for bulks as they go through, and then there's some reporting requirements monthly, 6 monthly and yearly to NZTA, which will show the process for what work was committed to, what work is being done and how the funds have been spent. So happy to bring those reports as they go through to this committee if you'd like.
Okay. So that should satisfy your request, yeah. Yeah, but it's not an auditor's job. Okay, any other ones that you might want to mention now? Otherwise, get back to me, okay? Okay, thank you. Move Councillor Dowsing, second Councillor Arkata Brown. All in favour say aye. Aye. Against, carried. Yep.
We could instruct them to do that while.
Yeah, but it's an audit function. This is what my point is. It's not for them to go and make a report around how it's integrated. An auditor would check to see that the funds have been spent the way they're supposed to be spent. That's an auditor's job. So you've got to get away from an investigation to an auditing job.
No, I'm not asking for an investigation. All they would be able to follow is the line item of cash in, which they would be following, that came from 2 or 3 grants. It's not a big deal.
Well, why wouldn't you get that from our staff or the people that are giving us the funds? That's where it'll come from.
To the Chair. They can, if you say it's a matter of emphasis, to check that the PGF funds are as what is stated within the financial statements.
Yeah.
They can do that.
Yeah.
And so for argument's sake, they make a matter of emphasis, or they have higher testing around the NZTA funds, that what we actually have in our ledger relates to what we receive. So that's a form of testing that they possibly could add to it.
Okay, that's fair enough. Okay. Councillor Dowsing?
Have we got any risks highlighted already that we'd like to be looking at, Pauline?
Sorry, didn't hear that.
Have we got any risks that we've already identified that we'd like to be looking at?
I could check what's on the audit schedule to see if there's anything like that. Give that to you to overlay. I don't know off the top of my head, but yes.
Okay. Well, I guess that's the end of the program. Hopefully we'll, quarter of an hour, we'll have our visitors, but thank you very much for the meeting. Interesting one. I'll close the meeting.